One of the largest investors in crypto right now, Tom Lee, really the person everyone's looking at when deducing where we are in the markets. He went ahead and hopped onto Fast Money recently. I wanted to go ahead and share a clip because I feel like he's one of the people you definitely want to be listening to when trying to see where the crypto markets are going to be going from here. And a lot of people really don't give him credit, as he's one of the biggest investors with $10 billion in Ethereum. He's really carrying a lot of the market. So let's go ahead and listen to the man and see what's going on with the markets.
Is it NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. You know, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, you know, Brian, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital, and as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah, I mean, Brian, it is. I mean, for instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and like overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto. But
you
Tom
implied
DeMark,
it in 2022. In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that are the proxy. So that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year. And that's respectfully to every other guest we've had on this fine network and fine show. Because I want to dive in a little bit deeper to what you're saying. That basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
This is the kind of stuff, Tom, it's one of the main reasons that we bring you on, because you understand what I would consider the engine oil of the stock market, right? We know how the engine works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy, we're watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
very well known
really
to me,
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So we might be at a bottom for Strategy.
Yeah.
Looking at maybe the DeMark indicators.
I love how. Okay, so I love how Tom Lee just goes ahead and starts yapping about the fact that, you know, we might really be near bottom here. It feels therapeutic. I mean, it really feels therapeutic. Let's break down what we just listened to. So clearly, there's been a massive cascade in the crypto markets. I mean, it has been very adverse, and there's been what seems to be a flash crash that happened. This is a good thing to me, because the faster the crypto markets go down, the faster it can go back up. If there is a prolonged period of sell-offs, I'm talking about months upon months, then it shows that the crypto markets are going to have a lot more struggle to get back up. The longer it takes for you to go ahead and get back on your feet, the harder it is going to be to do that. But if the market's just V-shaped recovery, then we're really not going to have to worry about that. He also said that the $77,000 level, that's a level that his analysts are looking at, could potentially be a bottom of this washout period. He compared the 2025 flash crash on October 10th to the 2022 Terra Luna crash. I mean, this was a 6-week period from May to June. It talked about the debasement of a stablecoin. It was, a stablecoin I know very well called USDT, which God bless USDT, because, that was a terrible time for all of us in the crypto markets. But really, it told a similar story, because 6 weeks down the line, the crypto markets bottomed and everything kind of came back together. There were so many news headlines on bankruptcies that we just aren't seeing right now, which shows to me that the crypto markets are a lot more stable than they used to be. They're just a lot more stable. There was a massive liquidation cascade. I still remember the day on October 10th. It was the day that Trump announced massive tariffs on China. Of course, those didn't materialize, but for the crypto markets, they did, because of the liquidation cascade that happened. These market makers couldn't catch up, and a lot of them had to sell Bitcoin. He also talks about the fact that the reason MicroStrategy is down more than Bitcoin is because what people typically do is they hedge against Bitcoin with MicroStrategy stock. And so once we see strategy bottom, that is a telltale sign that the crypto markets are beginning to receive confidence again. Because if people are getting rid of their shorts or their puts on MicroStrategy, that tells us as people that the big money is done hedging against Bitcoin. They're just full on longs. So if I go ahead and look at the MicroStrategy stock, you will see that today it's up 3%. Of course, the past month still down 39%. So we'll have to see when we get that bottom. But I think it's really interesting because the story is very different from 2022. In 2022, we didn't know if crypto was going to come back. We knew a ton of bankruptcies had happened and so much damage happened in the crypto market in such a short period of time that there was no certainty that this was going to continue as a story. But in 2025, the story is very different. We have these big truthsayers like Tom Lee, Michael Saylor, that have billions upon billions of dollars worth of capital, that talk to these institutions that actually have capital. And they're telling us that these guys have money. In the interview, Tom Lee was saying these guys have money. They have money to allocate into the markets. And so what we want to see here is, as liquidity begins to kind of stabilize and the crypto market begins to stabilize, the crash stops, the big money begins to enter the crypto markets again. And interestingly so, Bitcoin is now at $88,000. If you go ahead and check out the weekly on Bitcoin, you will see that we are starting off green. We're starting off green on the month, and if we can maintain that on the weekly, that is a great indicator that the worst is done. The worst is going to be done, and Bitcoin can finally begin to move back up because there's so much money in the sidelines, so many institutions waiting to get into the crypto markets that the second that the markets stabilize, they will be the ones to buy the dip. And so if you were ever in doubt as to what in the world is going to be coming in crypto, I mean, this has got to be a great video to share to your friends. Let me know your thoughts in the comments section. I thought it was a great watch. Stay classy, my friends, and I will see you all on the next one.